All right, everyone, welcome back to another episode of On the Margin. Today, I'm joined by repeat guest Jeff Booth, the author of The Price of Tomorrow and the GP at Ego Death Capital. Jeff, welcome back to the show.
Thanks. Great to see you again.
Yeah, absolutely. Yeah, it's been a little while since we've connected here. It was nice to see your face pop up there before we got on. I was like, man, it's been a while since I've spoken to Jeff, and you've done so much in the last couple of years. I'm sure we'll get into sort of Ego Death Capital and what you're doing over there, but um, I would love to kind of start to get your opinion on, we were talking a little bit before we came online here, but people are very interested in AI and what's going on in the field of AI. And although you spend most of your time focused on Bitcoin today, you do have this expansive background in technology as an entrepreneur, as an investor. And I think where AI and Bitcoin sort of intersect is this idea of deflation, right? Which you've done a lot of talking about in your book, The Price of Tomorrow. So maybe before we get into all that and the connection between those two things, it's been a while since I've just talked to you about your sort of macro outlook here. So I would love to maybe start at 10,000 feet and just get your view on, are we done with inflation? Is it coming back? Like, how do you see the sort of short and long-term battle between inflation and deflation?
So what's important for your listeners who haven't heard this thesis before to remember is this: where we are on this path is not a surprise. We've actually had the exact same trend line on AI and Moore's law for over 50 years. All it looks like is the steps are getting bigger because it's an exponential pattern and people are measuring linearly in their brain. So if you put that together, and remember in the book, and this was written in 2019, I wrote about the preceding 20 years saw us increase debt by $185 trillion to increase GDP by 46 trillion. But I wasn't as much worried about that. What I was worried about is what would come with the advancements in AI. And 2 chapters in the book were dedicated to AI because you could see the phase transition that society was going through. And you could see that most people were measuring that phase transition linearly, and they didn't understand technology and what was happening and how the system had to change. So what's important to note is the free market would be deflationary no matter what. That's why so all of inflation is created by more and more monetary easing and more manipulation of money. And it's because of this. So even the debate about will we have inflation and deflation, it's kind of a crazy debate because what it says is when will policymakers print more money is really what you're saying, and they have to. So let's just look at the numbers or the approximate numbers. There's $400 trillion of debt in the world that is already insolvent globally. It's already insolvent. No matter what you do, it's insolvent. The only way to pretend it's insolvent is to repay it through repression, financial repression, and through inflation, and make the debt cheaper in nominal terms. So it's already insolvent. If you paid back $1 trillion, it would take you approximately 32,000 years to pay back $1 trillion at $1 a second. Yet we have 400 trillion that's already insolvent. And so if you're measuring prices through a system that has to create more and more monetary units to stay solvent, it will look like prices are rising all the time. But if you're measuring it through a system, through a system that has a fixed cap on supply like Bitcoin and is outside that system, then prices will fall forever. So when people are measuring Bitcoin pricing going up or what's happening in the real economy, they're confused because the denominator is changing so fast. And that's all that's happening. So, and then when they're measuring Bitcoin price going up, they're actually defaulting to their bad denominator by measuring the world from the system that is breaking. So all of macro could be comprised in what I just said, and I'll make it even simpler. And in economics, and a law of economics is prices fall to the marginal cost of production, no matter what. It's why this video we're on right now is free, because there's thousands of competitors offering free video services and while there's competitors, they'll price it to zero and try to find and until the technology does the job, and then those entrepreneurs will go on and do a different job. It's why your photos are free. It's why the calculator app on your phone is free, and all that productivity is removing things from GDP. So there's less things in GDP. So you have prices fall to the marginal cost of production, period. Check mark. Number two, because of AI, which we can dig into deeper, you have exponentially increasing productivity falling to its marginal cost of production. GPT-4 launched GPT 3.5, but then 4 launched only a month and a half ago. And it's already free everywhere. You don't have to pay the $20 a month. You can get it free on a million different sites, and all of the different. So you have exponentially exponential productivity that should be falling to its marginal cost of production. And then the only reason why prices aren't getting cheaper at an exponential rate is because you have debt that would go immediately insolvent if you let prices fall, because you couldn't pay that debt back. Where do you get the money to pay the debt back? From your photos that are free. And now you see
Printing.
now you see the paradox, but it doesn't
Mm.
make your photos more expensive. It makes the other things that haven't transitioned yet more expensive, like housing or food. But all of those things are going to transition over time too. And so what you're doing by pretending the insolvent and printing or trying to save the system, you're actually just concentrating all of the gains, all of the artificial intelligence gains, all of that productivity in very, very few hands. And it happens at a faster and faster rate. And then government has to get way bigger to try to stop the problem they created, because as jobs are destroyed, as jobs are lost from and you've artificially created high prices just by monetary easing, where do those people go but the street? So look around major cities today and look at the chaos that it's causing. Those people fall out, and then they vote for government to increase government spending to be able to redistribute the money. And so that's why you see socialism on the rise, and on a predictable path all over the world, all over the globe, and the fights between left and right, because it's sitting on a base of and all of politics is literally just theater on top of printed money.
So to maybe sum that up, there's the problem as you see it is this $400 trillion worth of debt. On the asset side of that balance sheet is the cash flows that we're generating from technology. The problem is the cash flows that we're generating from businesses, et cetera. But technology is basically wiping those cash flows away because the cost of goods fall to the marginal cost of production, which is rapidly becoming free. That denominator, as the debt stays here and the cash flows go down, that has to be made up by printing, and that's the inflation that we're seeing.
And so just look at the companies that are winning out of that. Look at the S&P divided by the top 5 companies and everyone else, or look at any of these metrics by that, and all of the gains are in the AI the companies that are sitting on top of the data,
Yeah.
that are essentially using that AI, creating that AI and using it and removing labor to do it. And they're concentrating it faster and faster as a result. And everyone else in the globe is losing at that same pace, because it all relies on theft. Inflation is just theft. You don't vote for it, right? There's no vote for it. So somebody says, I'm going to change the amount of monetary units to be able to take money from you, essentially. If you're a labor, inflation is wage deflation or savings deflation. So I'm going to pick your pocket, and to be able to keep the financial system that we've glued together, that's based on inflation, solvent. So you ask why I became I'm known in Bitcoin now, because Bitcoin is the only thing that resolves that paradox. No other altcoin, no other anything. Bitcoin is the only thing that resolves that paradox. And so what's actually happening in Bitcoin is in my life, and what's happening there is prices are falling to the marginal cost of production when measured in Bitcoin.
Mm,
I'm looking through the world through a different measurement lens than most people are, and I understand what the existing system has to do. I understand all of the other things that have to happen, but macro is really simple.
mm,
It's in this: prices follow the marginal cost of production. We have exponentially increasing productivity, and prices should be falling. Everything else is an illusion. Everything else is it's not an illusion. It is real, but it's only real because people are choosing to stay in that system and and make that system have power over them.
Hey everyone, we'll get back to the show in a minute, but just wanted to let you know that we've got our Permissionless conference coming up. This is the one that we do with Bankless. It is the biggest and best conference in DeFi. It's going to be in Austin, Texas this year, September 11th through the 13th. If you've been in crypto for a while, you know that bear market conferences are the best conferences because those are the ones that all the alpha's at. This year, we've got a phenomenal lineup of speakers, and the topics that we're covering are insane. We're going to be talking about ZK Tech, roll-ups, account abstraction, MEV, app change, the whole suite of stuff. I cannot wait myself. So, because you're a listener of this podcast, you're also going to get a discount. Type in PODS20 and you're going to get 20% off your ticket. Click the link at the bottom of this episode and go get it now because prices go up every 2 weeks. I think it would be interesting to, some of these new technologies, right? People have described blockchains in these terms, but, new technology tends to be wildly deflationary. And eliminate revenues instead of creating them. Eventually, it might create more jobs down the line. And I'd be curious to get pick your brain on that. But, I'd love to sort of compare and contrast these two different technologies of, let's say, Bitcoin versus something like AI. There's actually a great quote our producer Will pulled from The Sovereign Individual. Or this is actually, I think Peter Thiel actually wrote this in The Sovereign Individual. In truth, the great conflict over our mega political future is only just beginning. On the dimension of technology, the conflict has two poles, AI and crypto. Artificial intelligence hold out that the prospect of finally solving what economists call the calculation problem. AI could theoretically make it possible to centrally control an entire economy. It is no coincidence that AI is the favorite technology of the Communist Party of China. Strong cryptography, at the other pole, holds out the prospect of a decentralized and individual world. If AI is communist, crypto is libertarian. So a bit of a different framing from what we had just discussed, but I'd be curious to sort of tease apart how these two different technologies fit into this future.
And they fit in through the productivity gains. That's why I dedicated 2 chapters to it. And I said, remember when you might not remember the book, but in the book I said, our intelligence, human intelligence, is error correction.
Yes.
But we stand on top of other people who do scientific method work that's done other work before us. And we sit on top of all of that work and we error correct. Same thing in any sport you do. You get better and better and better in the sport through that practice. It's dedicated learning creates that error correction. So us as a species, our human intelligence is error correction. In fact, what is wisdom? A lifetime of error correction. And so we make mistakes. We either learn from them or we don't. If we don't learn from them, we don't do very well. If we learn from them, we do better. And that's just what life looks like. And computers are now doing that at a rate that is bumping up against our ability to do it at a faster rate. And they're going to get better and better. As the first people that are using AI today are actually essentially capitalizing on the win from making productivity better. And the entire, and if there was $100 available, that'll go to $60 and they'll win most of it. And if a company does that, they'll win most of it. If a person does it, they'll be more valuable to a company, then they'll win more. And then they'll be training the AI to remove their job or somebody else to do it better at the next step to win more of it. And so that will bring prices down, or should bring prices down, as is essentially a monetary standard like Bitcoin would allow the prices to flow. Essentially, the productivity to flow to society in the form of lower prices, where you wouldn't have to work as much. Every year, you would get more for less every year. but it's so hard to see from an existing system that it works exactly polar opposite.
Mm.
So these trends, when Peter Thiel talks about that, he's actually right. But they're unstoppable anyways. As far as AI, it's going to advance. It has been advancing for 50 years at the exact same exponential path. And people are measuring, essentially they're looking at this and they're measuring a screen of a movie, a shot of a movie, instead of
Mm.
watching the movie. And
Yeah.
if you watch the movie, you know where this is going. I have a friend of mine, a good friend of mine, who runs a company called Sanctuary AI.
Mm.
Today they have robots in stores that aren't the robots that you would think of robots, that you do one task over and over and over. They're general purpose artificial intelligence robots that you ask it to run the store. It can unload a truck, it can stock shelves, it can do the checkout, it can do, they're getting better and better and better. And now I think right now they go 3 kilometers an hour, so they're slow. But hands, they could do any task humans can, like crazy intricate tasks. They could solder, they could do all, and their general intelligence. So that is merging with the same, what you're seeing in Chat GPT and what you're seeing with all the explosion of different AI tools. And it's merging into humanoid form that will then drive the marginal cost of production, not just of the digital world down, but the marginal cost of production of the physical world down. And what he expects is in 3 years that their cost of labor on these robots per hour that need no breaks, coffee breaks, union dues, that'll be $5 an hour. So imagine the $10 trillion today in the economy that everybody's talking about, that hasn't been touched because it's physical labor and it hasn't been touched by this, that now you have a connection to something that moves to $5 an hour. Now think about this through, instead of fear or out of that, imagine in that world that robots growing food for you. Why isn't food free? Right? Imagine that robots building houses. Imagine that all these things, or near free. And so that is the quandary that we live in. If you don't, if you print money against that to make prices go up, the same thing you're doing as a purchaser, trying to create more value, unless a company puts those robots in. If a company says, I'm going to have just human labor and they're going to be $50 an hour because we're printing money so much, and another company says, I'm going to have robot labor and it's going to be $5 an hour, so I provide more value to my people who are buying my service, what company is going to win? What company would you choose? So the paradox is, we look, our human condition is we look for things that give us value in our lives. And we're going to chase the best value. And that's what entrepreneurs solve, and artificial intelligence and that process is solving at a faster rate. Now, I need to qualify, because something that you just read in the sovereign individual, it will not work no matter what. No, the communist idea. And here's why it won't work. Even the best, and I'm very deep on the AI subject, but today, and for a long time, I can't imagine the AI that can predict every single person's what they want before it's there. And I'll give you an example. In the BlackBerry, I used to have a BlackBerry, and I never wanted to give up my BlackBerry. When the iPhone came out, I said, I'll never give up my BlackBerry. I loved my BlackBerry. And when I saw the BlackBerry, when I saw the iPhone, my mind changed immediately. The entrepreneurial process to create the iPhone was 3 years before that. And then when it came out in 2007, my mind changed along with millions and billions of other minds, and smartphones were the new thing. How could any AI or centrally controlled system predict all human behavior before the thing is invented that derives a human behavior? And the point is, that's why the free market works better, because it's all of these ideas to solve problems and that create more value for us. It's just the free market is not working right now because it's not free because of the manipulation of money. There is
Mm.
no free market with the manipulation of money. It just looks like communism and capitalism are exactly the same system under manipulation of money.
Could you? I'm gonna have to digest that actually for a second. Can you explain? Go further into that. Why is it the same under the manipulation of money?
How could there be a free market if all
Mm.
decisions from the free market were based on manipulation of money? There is no free market. It's
Mm.
all a controlled market. It's who gets to manipulate the money and who gets to decide who gets most of the money. It's an illusion that we believe we live in a free market that is not a free market anymore. And that's what you're seeing breaking all over the world because people are very, very confused by this.
I agree on the framework that you sort of laid out. Like, let's kind of get into the weeds of how you see this being resolved, because for the time being, like in the when we're recording this, right, there still is this massive wall of debt, right, and we have started to print, but we probably haven't ratcheted up, or the ratcheting up will just increase over the coming months and years. So I'm curious, like how you actually see this sort of playing out. Like, how do we sort of transition here? What's kind of the best case and what's the worst case?
So, so every country will be transitioning this differently, and there will be periods of calm. So if you look what happens in Venezuela right now,
Yeah.
so at 114% inflation rate, or Argentina 114% inflation rate, you would think everybody there would be Bitcoiners. What do? Most 95% of them, although there's higher adoption in some of these regions in Bitcoin, because it's protected families, saved families, allowed people to escape that country, because they could just move across borders seamlessly with all of the keywords in their head. Most people stay stuck in the system and they make it stronger. Right, by doing so, they will march against the system. They will burn homes. They will break windows. They will try to elect their person in the system, and that system just gets stronger. And that system then controls them further. So, so if that looks the same all over the world, why would it look any different here? Because humans make the same. They stay stuck in a system. So really what you're saying, and this is really probably important for a lot of your audience, there's $400 trillion of debt in the world. It's already insolvent, period. You have a choice in Bitcoin to not pay it back and start anew and watch all prices against Bitcoin fall forever. And if you want to decide to stay in that system and pay it back, it will look over time a lot like some of these other countries. I can't name the exact time in each country, but there's a lot of problems coming out of this. And then in that time, if you go back to Argentina or Venezuela or another country that goes through these debt crises and pays it back through massive inflation for a number of years, or hyperinflation, or a debt default, one or the other, then their cost of labor and their materials is so low versus the globe, it starts anew. And everybody thinks they're winning again. And that's where I said period of calm. And then they're rug pulled again. And they
Mm.
do it over and over and over again. And just think about the rate that has happened. And you can see the rate increasing around the world if you're just following the trends, and the rate of kind of authoritarian countries and dictators getting elected, because in that system, people will vote away their individual rights and freedoms for somebody who will save them. And you see it everywhere. And so that is happening all over the globe at a rate. And now ad technology is moving at an exponential rate today, and it's going to happen faster.
Mm.
And so this will play out all different countries all around the world. And what is happening is, if you're in Bitcoin, you're immune to it, or largely immune to it. You can have empathy for a lot of people that are going to go through it, but you're saving in a system that without counterparty risk, that's outside of that system.
Is there some sort of Overton window that shifts on money printing? And what I mean by that is, when we go through these periodic periods of calm and then punctuated by crises. So let's take March of 2020 when we had COVID hit. the response from the government was supposed to be one of strength from the Federal Reserve, which we're going to print as much money as we need to quell the problem. Don't worry about it. And that did it. It succeeded in quelling markets, created all these other side effects. It created inflation, financial price inflation, actual CPI headline inflation, but it was this show of strength and it worked. Do you think there's this Overton window shift at which the number that they need to print is so big that it actually starts to look like a sign of weakness, and people start to panic at the amount of money that needs to get printed, and people start connecting the dots more than they do now? Do you know what I mean by that?
Yeah, all of these things could happen, but I would say that that in my base case is this goes on for a lot longer and it hurts a lot of people in the process, and there's not a complete collapse. Remember when Argentina, Venezuela, Ghana, name country, Turkey, when that happens in those countries first, all of their labor gets way cheaper, and it actually helps persist the U.S. System longer. And the problem with that is the military-industrial complex in the U.S. today. You can't reshore manufacturing, critical manufacturing, because it's outsourced around the world. And so that creates a real big problem that for the U.S. too, or almost the politics versus the national security apparatus that's happening today. But if you just go back to that, if you print money, so remember when that first happened, we're not worried about inflation at all. There will be no inflation. Then there's
Yeah.
going to be transitory inflation. Then there's going to be persistent inflation. And it was an 18-month window of listening to essentially people watching a frame of a movie over and over and over. They're not, what you'll find is just about everybody you're listening to isn't predicting the future. They're predicting the present.
Mm.
They're walking outside and saying the weather's sunny today, and then all of a sudden it's winter and they're still in their bathing suit, because even if you say that printing of that money, the $6 trillion, that just walk through a longer timeline. Remember, TARP was supposed to be 350 billion, then it was 700
Yeah.
billion,
I
and
think
then
that's the
and then 6 trillion. And the next one is a staggering number, because it has to be, because the debt is already insolvent. And if you let that start to unwind through a deflationary collapse, so people that are saying you can't let a deflation happen, they're right. From the existing system, there'd be no food on the shelves. Because all the supply chains would stop. There'd be all the banks would fail, because every single thing down to the ground of your entire world you're measuring has counterparty risk to that 400 trillion. And that counterparty risk is everywhere. And so it's throughout the system. So if you start to let that unwind, let's say if there's a probability of a debt default or a delay in the US, imagine the implications. I don't think people can imagine the implications if that went on for very much time, because the amount of money, because you're just literally burning that thing and it's cascading. And the amount of money that needs to fill that hole doesn't just have to fill just to the top, it has to fill more. And the number explodes the longer that goes on. How much manipulation of money, or to pretend it's solvent, explodes. And these are confusing topics and especially if you're watching the nightly news, to have somebody tell you predicting the present.
I actually love that analogy. Yeah, because that's what most people do, right? They tune into CNN or Fox or something like that, and they hear, if you're listening to Fox, it's someone got murdered, and if it's CNN, there was some sort of injustice that was committed, and that's what you hear. That's what you hear and think is the news. And really, there's all this other stuff going on in the background that you don't understand or hear talked about.
Like, just go through the people that if you're watching and you like that person, go back and watch what they said 2, 3, 4, 5 years ago, and go back to each person that you actually spend any time watching, and and just look at their accuracy,
Mm.
because it's there. You could do that work. And then when you realize that there's zero accuracy, or there's then maybe tune into somebody who has higher accuracy.
I think I'm a podcast junkie myself, and I often do that. And I will say, if you go back and listen to people, I think the most interesting time period that I like to do this with is in April of 2020. I go back, I've gone a bunch of times and listened to a bunch of podcasts from that period of time. And it's very interesting to see what people are saying or reacting. Then maybe that's a bit unfair because that was crisis and there was panic, but there are some people's predictions fared a little bit better than others.
Yeah,
Um,
Paul Krugman is still listened to, right? He's and think of the number of things that he's constantly wrong on.
What's going on, everybody? Thank you for listening to On the Margin. I just wanted to take a quick moment to let you know about a very special offer that we have coming out of Blockworks Research. Now, many of you will probably be familiar with our platform, but Blockworks Research is the most blue chip spot to get research, data, governance, models, and a whole lot more about the leading DeFi protocols in the space. I've leaned on our analysts time and time again to explain complicated concepts going on in DeFi to me like I'm 5 years old. They can do the same for you. If you invest in DeFi or are just interested in it, it is an absolute no-brainer. As a listener of On the Margin, and to say thank you all for listening to the show, you can use Margin 10 for a 10% discount, and that gives you access to everything, which would be weekly in-depth reports, live data, all of that good stuff. So again, that's code Margin 10 for a 10% discount. Link is in the show notes. Sign up now. Thank you later. I hear you. I think it also, one thing that I didn't understand as a listener of much of this type of content is you should probably have an opinion on. It's very rare that one person is great for every topic, right? Usually you should try to filter a little bit. If you're very interested in understanding what's going to happen in markets over the next 7 days, that's a very different. The type of person that will be very good at that is very different than someone who takes a much longer sort of approach, and maybe someone with a monetary background versus a technology background. You're very unique in that you have both, but it's you have to filter a little bit as a listener too for
That's
information.
absolutely true. And our biases,
Yeah,
we outweigh the short term versus the long term. We make
yeah.
decisions. Humans make decisions with their short term biases, and they think and they miss all of the things that happen over the long term because of those choices.
Yeah. I have a personal rule that I found to work. I don't know why it works, but I found that it does, both in terms of, for a while I was in charge of finance for Blockworks, and I found handicapping forecasts and take 30% off. Just take 30% off, and that's more likely going to be, take your best guess at what you actually think it's going to be, take 30% off. I also have a little internal system of, if I really want something to be the case, I have a mental handicap of, I think it'll be a little bit less likely because I know that I really want it. And that's my internal bias talking.
Yeah. So
And
Bitcoin, in fact, in Bitcoin, what many people don't know is I tried to disprove my hypothesis over and over and over. And I tried to say how, and most of the time spent in Bitcoin, especially in the beginning, but still somewhat today, is actually trying to disconfirm my thesis. And
yeah,
what's happened is my probability of failure, as I've learned more, it was always probably lower, but as I've learned more, I've decreased my probability of this not working from 1 or 2% to 0.1%.
yeah,
And as I've decreased my probability of that and seen that effectively it resolves the paradox, and everything, if you measure house prices in Bitcoin, if you measure food prices in Bitcoin, if you measure everything in Bitcoin, what you'll find is they're falling to the marginal cost of production in Bitcoin. You just can't see it from the other, and people are mismeasuring it. So, and then the only thing I have to now resolve is, can it break?
mm,
Can anything break that? Because you'd have to expect, if a system had 10,000, it was 10,000 times bigger than Bitcoin, and it favored all of the media companies and all the money and everything else in the technology companies. It favored all of the politicians and all of the people that are essentially using that system to gain advantage. Then they would be at risk because Bitcoin would favor the value producers. And so instead of favoring the rent seekers, it would favor the value creators.
mm,
And so you would have to expect, if a system that was truly outside that system to be able to remain viable, it would have to withstand every attack possible. And what I've seen over time with Bitcoin is it just gets stronger and stronger and stronger with that attack. And I mean, provably stronger, more decentralized, more secure, more decentralized every year. And as all of these attack vectors have come in, and now it's starting to build into second and third layers technologies that are building on top of it that literally change the world. So you're having a paradigm shift, and the people that are living on Bitcoin or more on Bitcoin are actually just. Have you ever heard William Gibson's quote? Future's already here; it's just not widely distributed.
I have heard that actually. It's a
Yeah.
great quote.
So people on Bitcoin right now, and actually what you're seeing, people that are denominating in Bitcoin and spending more of the time there, are already living in the future. It's just not
Mm.
widely distributed, and more people are moving over to understand that what's happening here.
I read a book that describes, maybe it's analogous to the future that you're describing, or maybe it's an interesting thought exercise. It's called Childhood's End. It's a science fiction book by Arthur C. Clarke, and the premise of the book is it ends up being something else. But the initial premise of the book is that, without ruining anything, a big alien ship sort of descends on the Earth, and they instantly solve all of Earth's problems. No more genocide, no more hunger, no more poverty, no more anything like that. It's basically solved, and it sort of starts. That's the hypothetical that it starts from, and it explores what would happen to the human race in that instance. And it was kind of interesting, some of the predictions that he made. One of the predictions actually was that people would consume, without work to do, they would consume up to 3 hours of content per day. That was supposed to blow people away. Now, my iPhone says 5 hours, minimum. It's just so depressing. But it was kind of interesting. And I would draw the parallel to what you're describing, which is, look, the thing that's real is, first of all, the amount of debt, our liability that we have outstanding. And then we have this deflationary force in technology. And that's the future, really, that we should embrace, is a money that matches up the natural underlying forces that are driving our economy and our organization. So in a sort of perfect world, I could see, look, instead of every year your money gets debased, you actually have more money. The question is, what do you do with your time? How do you find purpose? So I don't know if that's an
Yep.
analogy. What do you think about that question?
So I wrote about that in the book, right?
Mm.
Because that is what's going to happen. And by the way, this is going to happen no matter what. This is what's happening over a long enough time period. This is prices fall to marginal cost of production. We would not vote for a system like that because there's too much personal incentive to either manipulate money or take advantage of manipulation of money. And I'll give you an example in that. Would you vote if a politician said, listen, every year your wages are going to go down, but up in real terms? So you're getting more for less. And no way, because what you would say is, I'm going to wait till it happens, and then I'll say yes. So because we wouldn't do that, you'd have to have a system that's outside of our control to be able to impose that on us. That's what Bitcoin does. It imposes that system on the human race and the people that are participating in that. And more will participate, and that's where the world will move. Now, where does the time go? And I think I explored a little bit of this too. I don't believe in utopia, and I don't believe in dystopia. I think we're too fractured. We want too many different things for that type of world. We solve problems. We constantly are trying to find, and so as we do that, we'll find other things at our time. We'll move into productive things that we value to solve things that we value in our lives. Don't know what exactly that looks like, but it would be really hard to see what that looks like from a system that is keeping you in perpetual fear today.
I think that is the challenge. It's one of those things where I do feel like at the beginning of early technologies, like there's a clip that I've shown a million people at this point, but it's Bill Gates talking about the internet
Yeah,
in
that's what I
1995.
mean. Yeah,
Just so good on Letterman.
yeah,
And he's trying to describe what you can do with the internet. And he uses this example of, well, for instance, you could watch a baseball game streamed on your computer. Letterman goes, you ever heard of radio? Does
Yeah.
that ring a bell? And it's much easier to tear something down, especially when the thing is unknown, but the unknown, the new thing ends up usually being directionally correct. And that's sort of what I've always thought about this kind of stuff.
Now, remember, and this is why this is really hard to see in Bitcoin too. But remember what the internet was going through. It wasn't just a product. It wasn't. It's way bigger impact on our lives than, let's say, the iPhone, which sat on top of that protocol stack.
Hmm.
So the base layer of the internet was TCP/IP, and it was developed by DARPA in the 60s. And protocols harden. They ossify. And they have to harden because if the base layer of the protocol is at risk, everything built on top of it is at risk. So then layer 2, layer 3, layer 4 was HTTP, and that didn't come out till 1989. So remember, protocols harden, and then you cannot see. No one can see what's possible on the next layer until the next layer is there. Then entrepreneurs race in and take advantage of their imagination on what they can build on top of that next layer. So remember in 1995 when Bill Gates said that, and by the way, remember he was also late to some of the stuff in the internet.
He was, yeah.
Right. Right. So remember when he said that, 1985, that was 6 years at 1995, that was 6 years after HTTP. And that was 6 years after entrepreneurs started doing this. And you didn't have the iPhone until 2007. You didn't have Google to 2000. We take for granted that all these things have been this what we're doing right now. This video podcast that can touch millions of people in an instant now, where it didn't look like that before. And all of those advantages came after the protocol was in place, or the protocol stack was in place. Comes in layers, and you can't build on until after. So, and that's how protocols look like, instead of just the companies that operate on top of the protocols. So when he was saying that, and he was late to the internet, or what was happening, imagine how many people totally missed that. What was happening. Imagine what Sears did versus Amazon. Imagine what all of these other companies that believed that their world was exactly never going to change because they couldn't see the impact of all of these millions of entrepreneurs on a free and open system, being able to create value for other people on top of that. Now extend that thinking. If it happens, if that's the way the world looks, and you can see what it looked like in that wave, now what does it look like if now you've incorporated a peer-to-peer internet, essentially a Bitcoin base layer that is tied to energy, so it chases energy abundance around the world, provides a pricing mechanism to energy abundance, and most people are looking at Bitcoin and it's just a store of value. And then Lightning comes out, and then Fediment comes out, and some of the layers on top of this are just early, and entrepreneurs are racing to them. And what I can tell you is why this is so exciting is it literally changes the world, and people are pricing it as most people don't even have any clue what Bitcoin is. They're still measuring it from the existing system when it's a protocol change to society.
Jeff, talk to me about that last bit. I would love to maybe dig into a little bit of your activities at Ego Death. And you mentioned some of the things that are happening on top of Bitcoin. Maybe it's Lightning. What are you interested in sort of investing in? If you could kind of outline the thesis of the fund, and then what are some of the interesting projects that entrepreneurs in Bitcoin are looking at building?
So the thesis of the fund was effectively what I just said. So what would a protocol stack that had to ossify look like, and what would it look like to everybody else? And then where would other things be built? Because you could do nothing on Bitcoin. Bitcoin, the only thing you could do, it was decentralized and secure, and it was provably decentralized and secure, but it had no utility because you could only do 5 to 7 transactions a second. So the strength of it as a base layer was the decentralization and security that actually put a pricing mechanism to be able to chase abundant energy. So to tie a physical world manifestation of energy into proof of work and decentralize and created decentralization and security as a result of that. That would be a big deal. That would, if that stood what I just said, that's why I said I did a lot of work trying to disprove that. That would be a huge deal, because it would allow a transition from change, but you couldn't do anything on it. So all of the other coins that came up saying, I have a better Bitcoin, I have something else, and had to make a trade-off that and do something different to scale, make perfect sense in a free market that's trying to find a better value. Make tons of sense. But I asked myself, what is the utility of those things that have to either centralize or be insecure? And there's no utility. But I understand why entrepreneurs chase them. I understand why businesses invested them. And in the early going, Bitcoin did really well. So I'm going to create a new coin. I'm going to create dog coin. I'm going to create this. It's going to do really well too. And a whole bunch of money chases it, and it creates a loop similar to the loop in the financialization market, where while you're driving massive liquidity, lots of things can grow and look solvent that aren't solvent. So what the thesis of the fund was, it was just emerging layer 2s and layer 3s. They were just starting to happen, that this incredible wave would build on top of Bitcoin, because now you had a stable and secure base layer that could be built on, and you could solve scalability on the second and third layers and offer everything else that those alternative coins could have done on top of Bitcoin, while retaining decentralization and security at the base. So, but it was just emerging. It was like the internet in 91. It was like, and so what would it look like as a fund who was counterintuitive to everybody else, to building kind of in the space that didn't have long-term utility? What would it look like? It'd create a value fund that a real base that built the future of what that was looking like. That. So that's why we started the fund. And the projects we look at for, quite honestly, sometimes I don't even know. Sometimes you see something over here with Lightning, you see something else, you see an idea over here. The most exciting projects are the ones that aren't just copies of what we know today. Like, we wouldn't have, out of the existing, when the internet was started, you wouldn't have thought of building the iPhone. You wouldn't have thought of building at Google. You wouldn't have thought of building Facebook. These are new ideas with technology that did something different. Most of the first wave of companies were I'm going to do faster the same thing I did before, right? And so that's what's happening right now in some of those. And Fediment's a good example, or Fedi is a good example, that it's early, but it actually creates a federated operating system. It's almost like as it rolls out, it could look like Apple without the fees to Apple from the App Store to use their operating system, where the entire globe can build to it and offer modules. It solves it helps the self-custody problem in solving, because a lot of people are worried about self-custody on Bitcoin. So they risk their coins on exchanges because they trust somebody else. So it allows you to essentially trust a group of guardians, and I could say those guardians could be my family. And so I could create my own federation with my family. And if I ever lost my coins or my password, I could just say to my daughter and my wife and my son, it's me. Can you? And so it kind of solves that problem. But think about what that also does. If you're in North Korea and you can't get money in North Korea, and your guardian is out, or group of guardians is outside North Korea, they can get money to you directly to your wallet. Nobody, complete privacy, nothing can stop it. And the server, and the guardian server, would be like a Raspberry Pi that would be outside of the country. So imagine that capability in solving humanitarian crisis all over the world, and providing privacy encrypted chat that also looks like an operating system. So something I'm really excited about. Synoda, a company that essentially they're using Lightning to, if you look at energy companies, one of the biggest markets around,
Yeah.
energy. Energy companies love Bitcoin miners because they handle their base load, right? When prices go negative or low, Bitcoin miners activate, and so they really want that customer because it produces a floor on energy cost. Problem with that customer is because of the risk they take in their balance sheet, they're and the volatility in Bitcoin. They a lot of times 90 days later, that customer doesn't pay the energy company after
Mm.
the watts have been transferred. Sonoda prices that every day. So it takes their worst customer or their highest credit rate customer and makes it and that they need and turns it into their best customer. And if you think about that in an energy transition, as energy transitions, and now you're essentially the lag in time and kind of credit terms on top of energy. By the time the watts are flowing, the distribution of energy to you and you pay, there's about a 15% cost of energy just in the financing cost of energy.
Mm.
And now utilizing Lightning, Sonoda can actually change that for energy companies and have energy priced in real time, settled in real time.
Yeah.
So lots of different things like Breeze, a non-custodial wallet, a whole bunch of things that are a whole bunch of companies that are essentially, if you look, just why the internet's a really good example is if you looked at the internet where it was in 95, you wouldn't see what was coming. If you're looking at Bitcoin through the lens of what you think is there right now, you have no idea what's coming.
Jeff, that is honestly, I look forward to seeing the kind of companies that you invest in that fund. It's probably a space that I should pay more attention to, and I'm just really interested to see what you do. Unfortunately, I think we've got to wrap it here, but I always just love our conversations, and it's been way too long since you and I have talked. So, if folks want to find out more about you or the work that you're doing at Ego Death, maybe if you're a Bitcoin entrepreneur listening, or if you want to follow Jeff View or get the price of tomorrow, what's the best way to sort of get information?
Actually, that's important. Go to my website, jeffbooth.ca, because I keep an updated list of any social media that I'm on. I'm not on, and there's so many frauds out there trying to claim, uh, trying to take your money from you. So go there first. I am on Twitter. I'm on Nostr, but check the proper address through that website. That's probably best.
We'll link that in the show notes then. Jeff, this has been a very fun conversation. Thank you so much for your time. And yeah, we'll have to not let 2 years go by next time. It's been too long.
Awesome.
All right.
Thanks,
Cool.
Michael.
Bye,
See
Jeff.
ya.